In this video we are going to talk about great dividend aristocrats. So before starting, please like this video and subscribe to this channel for our future updates. This year's S&P Wink with tongue sticking out 500 dividend aristocrats included 10 firms with high yields, steady dividend growth for over 25 years, robust earnings, and mainly favorable analyst ratings. To measure each stock's appeal among the smart money, we included hedge fund sentiment. Number 10. Essex Property Trust Incorporated, NYSE, ESS. Essex Property Trust Incorporated, NYSE, ESS, is a California-based REIT that invests in residential buildings on the West Coast. Essex Property Trust Incorporated, NYSE, ESS, is one of the best American property managers on our list of top dividend aristocrats to buy for 2022. On October 25, Essex Property Trust Incorporated, NYSE, ESS, reported GAAP earnings per share of $1.82, topping expectations by 81 cents. Sales totaled $360.62 million, beating expectations by $3.08 million. KeyBank analyst Jordan Sadler boosted his price objective on Essex Property Trust Incorporated, NYSE, ESS, to $371 from $363 on January 13. The analyst maintained an overweight rating. Essex Property Trust Incorporated, NYSE, ESS, declared a $2.09 quarterly dividend on December 10. The dividend was given on January 14 to stockholders who had registered on the 3R. Insider Monkey analyzed 21 hedge funds that held $264 million in Essex Property Trust Incorporated, NYSE, ESS. In the third quarter, AEW Capital Management owned 590,566 shares of Essex Property Trust Incorporated, NYSE, ESS, valued $188.8 million. In the same way that hedge funds have invested in Walgreens Boots Alliance, Chevron, and Johnson & Johnson, hedge funds are investing in Essex Property Trust, NYSE, ESS. Number 9. PepsiCo Incorporated, NASDAQ, PEP. Other flagship brands include Pepsi, Mountain Dew, Lay's, Gatorade, Doritos, Quaker Foods, and Fritos. As of Q3 2021, Terry Smith's Fund Smith LLP owned about 10 million shares worth $1.5 billion in PepsiCo Incorporated. Insider Monkey's Q3 database showed 61 hedge funds owning PepsiCo Incorporated, NASDAQ, PEP, down from 66 funds in Q2. PepsiCo, NASDAQ, PEP, declared a $1.075 quarterly dividend on November 8, which was paid on January 7 to shareholders of record on December 3. With a 2.45% annual yield and 49 years of dividend increases, PepsiCo, NASDAQ, PEP, is a dividend aristocrat to buy for 2022. On January 4, Argus analyst John Stazak boosted his price target on PepsiCo Incorporated, NASDAQ, PEP, to $195 from $180 and reaffirmed his buy rating. To make more money, the company is cutting costs and working to save money and improve productivity through 2023. Number 8. Johnson & Johnson, NYSE, J&J. Johnson & Johnson, NYSE, J&J, is an American health and wellness firm that manufactures medical devices and pharmaceuticals. For 59 years, Johnson & Johnson, NYSE, J&J, has been a dividend aristocrat. J&J, NYSE, J&J, reported third-quarter earnings on October 19. The company's $2.60 EPS surpassed expectations by 25 cents. The $23.34 billion sale was up 10.7% year-on-year, but $379.76 million short of expectations. Johnson & Johnson, NYSE, J&J, declared a quarterly dividend of $1.06 per share on January 4. According to Credit Suisse analyst Matt Miksic, Johnson & Johnson, NYSE, J&J, pharmacy franchisees are growing at a rate of 15.4% compared to his 5.7% forecast. Insider Monkey's third-quarter database showed 88 hedge funds long Johnson & Johnson, NYSE, J&J, worth $6.8 billion. As of Q3 2021, Arrow Street Capital owned 5.30 million shares of Johnson & Amp, Johnson, Nyse, J&J, valued at $856.6 million. Income investors should consider Johnson & Amp, Johnson, Nyse, J&J, in addition to WBA and CVX. Number 7. Atmos Energy Corporation, NYSE, ATO. Atmos Energy Corporation, NYSE, ATO, is a major U.S. natural gas distributor with operations in 9 states. It is one of the best dividend payers for 2022, with a 2.56% yield as of January 14. On November 10, Atmos Energy Corporation, NYSE, ATO, issued a 68-cent quarterly dividend, an 8.8% increase over the prior 63-cent payout. For shareholders who had their dividends paid on November 29, the dividend was paid on December 13. On December 15, BofA analyst Julian Dumoulin-Smith raised Atmos Energy Corporation, NYSE, ATO, to buy from neutral. As gas prices normalize, the analyst expects investors to return to the cleanest and completely regulated companies first. Demographic and customer growth are driving improved earnings for Atmos Energy Corporation, NYSE, ATO. In the third quarter of 2021, Insider Monkey analyzed 867 hedge funds, and 16 of them owned $77.4 million worth of Atmos Energy Corporation, NYSE, ATO. Atmos Energy Corporation, NYSE, ATO, held the largest stake in the company, valued at $17.1 million. Number 6. The Coca-Cola Company, NYSE, KO. On December 15, the Coca-Cola Company, NYSE, KO, issued a 42-cent quarterly dividend to stockholders. The company has a 2.74% yield and has increased dividends for 59 consecutive years. The Coca-Cola Company, NYSE, KO, reported 65 cents EPS for the third quarter, 7 cents over expectations. Revenues were $10.04 billion, up 16.14% year-on-year, and $321.89 million higher than expected. On January 4, Guggenheim upgraded the Coca-Cola Company, NYSE, KO, from neutral to buy. Despite poor immunization rates, the Coca-Cola Company, NYSE, KO, is seeing solid growth markets. Inside sales are recovering faster than predicted. In addition, the analyst predicts that the Coca-Cola Company, NYSE, KO, will earn 12% more money each year until fiscal 2023. Insider Monkey tracked 61 hedge funds in Q3 2021, with $25.1 billion invested in the Coca-Cola Company, NYSE, KO. Number 5. Walgreens Boots Alliance Incorporated, NASDAQ, WBA. Wabco Incorporated, NASDAQ, WBA, owns pharmacy chains, distribution networks, and drug manufacturing companies. On January 6, Walgreens Boots Alliance, NASDAQ, WBA, announced its financial results for the fourth quarter of 2021. Earnings per share of $1.68 surpassed forecasts by 34 cents. Revenue of $33.90 billion was above consensus projections by $946.75 million. On October 20, Walgreens Boots Alliance Incorporated, NASDAQ, WBA, declared a quarterly dividend of $0.4775 per share. NASDAQ, WBA, has a 3.52% dividend yield as of January 14, making it a top dividend aristocrat to buy for 2022. On January 10, Mizuho analyst and Heinz boosted her price objective on Walgreens Boots Alliance Incorporated, NASDAQ, WBA, to $56 from $51. The analyst attributed the improvement to improved COVID-19 testing and vaccine launch prospects. Number 4. Cardinal Health Incorporated, NYSE, CAH. Cardinal Health Incorporated, NYSE, CAH, is an American multinational healthcare company. The company had a 3.7% yield as of January 14 and had increased dividends for 34 years. Cardinal Health Incorporated, NYSE, CAH, declared a $0.4908 quarterly dividend on November 4, which was paid on January 15 to shareholders of record on January 3. On November 9, Cardinal Health, Nyse, CAH, reported $1.29 earnings per share, 6 cents below expectations. The period's revenue increased 12.55% to $43.97 billion, beating expectations by $2.14 billion. It was on January 11 that Barclays analyst Steve Valiquette cut his price target on Cardinal Health Incorporated, Nyse, CAH, from $65, but he kept his overweight rating. Number 3. Consolidated Edison Incorporated, Nyse, ED. An investor-owned energy firm based in New York, Consolidated Edison Incorporated, Nyse, ED, is a top dividend aristocrat for 2022. Consolidated Edison Incorporated, Nyse, ED, declared a $0.775 quarterly dividend, yielding 3.71%. On December 15, shareholders of record on November 17 received their dividend. On December 22, RBC Capital analyst Shelby Tucker lifted the price objective on Consolidated Edison Incorporated, Nyse, ED, to $85 from $78. Consolidated Edison Incorporated, Nyse, ED, may be able to benefit from considerable investment opportunities given the state's ambitious renewable energy ambitions, but the regulatory climate in New York is difficult. On November 4, Consolidated Edison Incorporated, Nyse, ED, reported third-quarter earnings per share of $1.41, 7 cents below expectations. The $3.61 billion in revenue increased 8.4% year-on-year, exceeding projections by $152.85 million. Number 2. Abvai Incorporated, Nyse, ABBV. Abvai Incorporated, Nyse, ABBV, an Illinois-based biopharmaceutical company, stated on January 11 that it expected $15 billion in sales revenue by 2025 for two of its hallmark medications, Rinvoq and Skyrizi, aimed to deal with inflammation and psoriasis. Abvai Incorporated, Nyse, ABBV, declared a quarterly dividend of $1.41 per share on October 29, an increase of 8.5% from the previous distribution of $1.30. The dividend is due on February 15 to shareholders of record on January 14. On January 14, Piper Sandler analyst Christopher Raymond kept an overweight rating on Abvai Incorporated, Nyse, ABBV, with a $160 price target after the FDA approved Rinvoq with a better-than-expected atopic dermatitis label, and the analyst expects a $2.15 billion fiscal 2022 U.S. revenue estimate for Rinvoq. Number 1. Chevron Corporation, Nyse, CVX. The smart money loves Chevron Corporation, Nyse, CVX, a California-based multinational oil firm operating in 180 countries. In the third quarter of 2021, 51 hedge funds owned $4.4 billion in Chevron, Nyse, CVX. On October 29, Chevron Corporation, Nyse, CVX, reported Q3 earnings per share of $2.96, beating expectations by 77 cents. Revenue increased by 82.86% to $44.71 billion in the third quarter, exceeding expectations by $3.86 billion. If you are a shareholder of Chevron Corporation, Nyse, CVX, on November 18, you will get a dividend of $1.34 per quarter. What do you think about our video? Please let us know in the comments area below. If you enjoyed this video and would want to hear from me again, please subscribe and turn on the notification before leaving. Thank you for watching us.